Okay, so at this point, let's bring in DK Joshi as well. He's a chief economist at Crisil, and ask him if he's happy as well on these numbers. Mr. Joshi, you know, inflation coming in at an 8-month low. We also have the WPI figure itself, which has come in much lower than we were expecting. First and foremost, run us through your initial reaction on these numbers.
Well, I think both CPI and WPI have surprised on the downside, and I think the reason for that is primarily vegetable prices, and vegetable inflation had gone way above the expected levels a couple of months back, and were expected to correct, and so they are correcting sharply. So I think so this is a bump that was created by vegetable inflation, which has been flattened. I mean, I would put it that way. I think the other issues as far as inflation is concerned, I think are very much there, and I think you have to keep your fingers crossed. If I take you back to 2008-9 when the Lehman crisis happened, WPI inflation had even come down to negative levels, but then again shot up to double digits within a few months. So I think the structural issues as far as inflation is concerned are very much there. But yeah, I think what is definitely true is that the next 3-4 months are going to be of low inflation, and particularly I think driven by the low food prices, because the rains have been good. I think its impact on food is being felt, and since the reservoir levels are quite good, and the Rabi crop is also expected to be a bumper crop this year, so I think the supply side is comfortable. I mean, so to say, at least for next few months. So going beyond, it depends on how the monsoons play out and so on and so forth. But also I think it depends on how the demand in the economy rises. I think on both the fronts, a surge in inflation of the kind that took place in 2009, 10, 11 doesn't seem likely, because the demand itself is quite depressed in the system. I mean, we are talking of a very, very mild recovery next year. So the demand pressure on inflation will remain muted. But I think the other issues of food, etc., I think will depend on how the next year's rain play out. But I think as of now, yeah, it is definitely comforting, and RBI could be on hold, I mean, because of this in the next policy.
I was in fact going to ask you that you know, outside of these 3-4 months, what are you expecting that the rest of the year will look like? Talk to us now about your own estimate of really how the current account deficit could pan out. Like you're saying, we've seen good numbers for CPI and now good numbers for WPI as well. What impact is that going to have?
Well, I think for current account deficit, I think we have a forecast of 2.5% of GDP for 13-14. Next year, we expect it to go up, because since the current account deficit has come down, I think it's time to start normalizing some of the factors which are creating other distortions, like duties on gold imports, etc. I think that we'll see the reversal of that in a measured way over the next couple of months. So I think I would expect gold imports to go up as a result of that. So that will have an impact on current account deficit as well. The second factor which will push up current account deficit a little bit in 2014-15 is also going to be the fact that economy is going to lift, even though marginally. So I think both of these factors will again push the current account deficit to close to 3% of GDP. One was a removal of some of the restrictions on gold, and the second is economy lifting and imports getting a kick thereby. So the CAD will rise next year. I think that is our forecast. For 2014-15, it will be at 3% of GDP. For this fiscal, we expect 2.5% of GDP.
Okay, I want to bring you in now on your views as far as the currency goes. You know, we've seen an improvement in the rupees, up almost 0.25% as we speak. What sort of range are you targeting for the rupee in the next couple of months?
I think we expecting a median value of around 62. So it will sometimes be over that, sometimes be below that. The exact number is difficult to predict, but I think our median forecast is 62 for over the next couple of months.
Mr. Joshi, before you joined us, I was chatting with Brinda about the core inflation part of it. WPI core inflation is about 2.75, and CPI is around the 8% mark. Going forward, are we seeing an upward pressure on inflation? Because remember, if demand picks up, we will also see an upside pressure on inflation. So are we seeing some fears on that front?
Well, I think it depends on how swiftly the demand picks up. I mean, I don't think anybody is expecting the recovery that we saw after the Lehman crisis. I mean, when the growth actually went up from a bottom of 6.7% to close to 9%. I think this time even we expecting 6% growth for 2014-15. And given that the last 2 years have been very, very weak, I think there's a strong base effect. So even if it goes up to 6%, I don't think it's going to create too much pressure on demand side pressure on inflation. I think for a variety of reasons. I mean, one, the demand itself is on a weak wicket. The second is that whatever tightening has taken place in the last couple of months, I think that's going to play out with a lag. I mean, so that's going to have a depressing impact on core inflation as well. So I think core inflation might remain sticky, but I don't see it surging from these levels.
All right, Mr. Joshi, thanks very much. Always good talking to you. DK Joshi there, and also Brinda talking about the figures that we've seen coming out on WPI, coming in lower than I estimated, 5.05. Inflation has also cooled, it come in at an 8-month low. The rupee has recovered and it's trading up almost 0.25%. I will try and bring that up on your screen.